Hey everyone, and welcome back to the show where we talk about all things stock related. So we look at different investment strategies, we look at what's happening in the markets, we actually answer the internet's most pressing questions regarding investments and stock trading, and we also from time to time mention different stocks that we believe should be looked into and possibly added into your portfolio. So we don't give any financial advice as we are not licensed financial advisors, but we do speak a lot about different financial investments, different financial products, and also just different assets that you should look into regarding stock trading more specifically and adding to your portfolio. And this is really just an education and growth video to help you grow and in knowledge and education. And so today's question that I actually have is, what really is the SEC and what are their roles in investing? So a lot of persons know about stocks, a lot of persons know about trading, a lot of persons know about the brokers, but many persons don't know about what happens behind the scenes. And so this is really what the SEC comes into play. So there are the regulators, they provide the rules, and they just govern and manage the actual whole investment environment in the United States. Now, a quick Google search will actually share with you that the SEC was actually created in 1929 after the great market depression that happened back then. And so for many persons who are not aware, so there actually was a huge crash in the stock markets back in the early 1920s, 1930s. And so a lot of persons who had invested during this time would have lost significantly, and this was due to ease of access, lack of regulation, lack of knowledge from persons that would actually be investing. And at that time, persons who would invest would really be persons who had a lot of money and could be willing to take on certain risk. And so after this huge market crash happened, there was this whole fear against investing and persons withdrawing from the market. And so that's where the SEC was created, and they were really just formed as an actual independent agency from the government to actually manage, regulate, protect, promote investment assets. Now, the SEC actually stands for the Securities and Exchange Commissions. So what they do is they really just govern the entire investment market. So they look at stocks, bonds, mutual funds, all those different assets, and how they really impact the consumers and persons that stakeholders alike. So the SEC was actually, they are that independent governing arm. So they are just there to maintain and promote stability, help with maintaining confidence within the market. So they actually have different rules, regulations, and that they form. And one of the key things that they do is the SEC actually tests different persons. So they go about and they test their financial advisors, they test the actual brokers, they test their company advisors. So all these persons have to actually go through yearly tests. So once you submit with the SEC and you're approved as a licensed financial advisor or broker dealer or some sort of independent private investment advisor or so that works specifically with companies or so, then you have to actually get approval from the SEC. If you don't get approval from the SEC, you will be locked up. Once they are aware and they find you, you will be locked up if you're giving financial advice and you're not qualified. So it is a crime. So ensure that the persons that you're taking advice from and you're paying for advice as well, that they're licensed and registered, and ensure that there is no blur lines between what is shared, so everything is transparent. So one of the things that an actual advisor has to do is they have to remain very transparent with their customers, and they have to have their customers' best interests at heart. So what that means is that an advisor cannot or should not be pushing a particular asset or trading strategy that will only benefit them. So with trading, there's day trading and there are different trading strategies that would actually be more frequent than others. And what that really does is that the more frequent the trading is, the more commissions that the advisor would earn, and because the company would earn more commissions, and then that would trickle down to the advisor. And so some unethical advisors would actually in the past have advised customers to purchase and sell more frequently, stating, just sharing with them that the investments would do better if they were more actively trading it. And so what had happened was that these investment advisors in the past would have been found out, and the real only benefit that they would have gotten was that it was just more activity done on the broker's account, and so the commissions would have been more, which would have meant that they would have gotten more pay. But in reality, there was no benefits to the client. It was probably a loss, because the client would actually have been paying a lot more in commission, whereas if they had just invested the money in that one firm or maybe one of the other stocks that they had purchased and sold very quickly and rapidly, if they had just invested the funds and held on to it, they would have gotten the same returns, or they probably would have gotten better returns, but instead they actually ended up paying a lot more. They actually ended up paying a lot more in fees. And so this would be a case of not having that client's best interest at heart. And so this is really what the SEC was created to do. And each jurisdiction, each market that you go into, they have their own regulatory body that is very similar to the SEC. So in Jamaica, there's the FSC, that's the Financial Services Commission, and they really just maintain and promote stability within the financial sector. So their real goal is just to provide rules, regulations to different investment companies, different investment advisors, brokers, security dealers, anyone that has actual aspects in the investment side of the economy. And similarly in the UK, there is the FCA. So it's the Financial Conduct Authority, and their main role and goals is to promote stability, provide rules and regulations within the United Kingdom and to ensure that the investment companies have their customers' best interests at heart. So all of these different companies regard different commissions, regardless of the jurisdiction, regardless of the country, the main purpose is really the same thing, though some may do more than others, and other countries may actually have different breakdown of agencies that regulate a particular part of the economy separate from another. It's the same overall group and products that they do maintain and regulate. And one more thing that I actually had forgotten to mention was that the SEC, and similarly with the FSC in Jamaica and the FCA in the UK, they all actually have a duty in terms of their anti-money laundering laws that they have. So they actually have a huge role to play in anti-money laundering and terrorism protection act. So what they do is they actually have to go out and ensure that all companies registered with them as investment dealers, stock securities brokers, all advisors, traders, everybody that is in that system has to actually be trained, and they actually have to do a test depending on how the country has it and the rules and time frame. They have to actually do tests on the Anti-Money Laundering Act to ensure that they are up to date, they're up to standard, they're up to speed, and they know of the different ways that these unethical persons would actually go about trying to get their dirty monies clean and into the actual financial system. And so this really is what the SEC was created to do. So if you ever wondered what the SEC was really designed to do, it's really just to provide stability, provide rules and regulations, and to ensure that there is peace and confidence within the financial industry. And so the main goal is to protect the consumers and to ensure that they have their best interests at heart. And right before I wrap up, I just want to share as well too that right now with the SEC, they actually have cryptocurrencies within their rules and regulations now. So their goal is not to regulate and maintain the crypto space and the crypto industry, but it is to maintain some stability and unification within all companies that are registered with them that do offer crypto or have exposure to crypto. And so if you check their website, you've realized that there are few companies right now that have actually failed their crypto regulations, and the newest two were, well, the newest one was a company based in Chicago, and the second newest date was a company based in Florida, where pretty similar what they did. It was that they had exposure to the crypto industry, or they invested in the crypto industry, and they failed to share this information with their customers. So based on what is being shared with the SEC and the crypto as of right now, it's just transparency that they require. So if you're going to go into the crypto space, tell the SEC that you're going into the crypto space. Don't just buy crypto and don't tell them and don't tell your customers that you have crypto in your portfolio, because that's where the the trouble comes and the blurred lines occur. And so what they are really trying to do is to just have transparency and have that rule and regulation and everybody knowing everything that you are doing, because once you're a publicly traded company, then by law you're required to actually have your information out there so that investors can make a proper decision as to what is happening within the company and what is going on. And so this really is it for today's session. So if you were unclear about what the SEC does, then hopefully this shed some light, this shed some clarity, and this shed some actual understanding as to their rules, their regulations, their purpose, and what they were really created to do and to be. So thank you guys so much for tuning into this episode. I do hope that you did like it. If you did, feel free to give us a thumbs up or a like wherever you consume this content, and feel free to share it with anyone that you may know who would benefit from this information, and leave any comments down below. I want to hear from you all, and I will respond to you as soon as you leave a comment down below. And subscribe so that you don't miss out on any new information or any new episodes as soon as they are released. Until next time, take care. Love you guys. Bye.